Good day folks and welcome to Best Trade Setup. In this video I'm going to share with you one of the setups that I look for when I'm analyzing the charts. This is a consolidation after peak formation high. Now this peak formation could be a V-top, an M pattern, a triple top, a head and shoulders, then followed by a consolidation either right about here or slightly below it. Now with this setup, it can give me a 1 to 2 risk to reward or even more. Most of my setups I go for a 1 to 1, but with this one I expect for the most part to give me a 1 to 2 risk to reward. Now I'm going to show you a couple of examples to help better explain this chart pattern. Before we get into anything chart related, I want to specify what I consider as a fake out. Now this right here is going to be our resistance level. These vertical lines are just going to separate all these patterns that I'm going to explain. This is a fake out where we have one candle going up, closing above the level, and the next one closing below it. This is a valid fake out according to me. It differs for different traders, but for my specific strategy, I'm going to explain to you what is a valid fake out. The next one, what we have here is a fake out in the form of a three candle pattern, or we could have it in this form where it's made of four candles, nothing more than that. The reason being is because when price starts here and stops right here, it forms this pin hammer right here, rejecting this resistance level. Same thing with this one as well. Just start here and here. You'll see that price just has a huge wick rejecting this resistance level. Another form of a fake out in the form of a three candle pattern is when we have these candles right here, but the wick is on this side of the candle body as compared to this side of the candle body. So these examples here are what I consider a valid fake out. Now this is the before and this is the after. As you can see, price here gave us slightly more than a 1 to 2 risk to reward. These are the things that I was looking at to enter this trade. First of all, you see that this right here, price did go above this level, but didn't form any of the examples that I showed earlier on as a valid fake out. But we do acknowledge that price did go above this level and closed back below it. Price then came back up again and swept this level, did a sweep here, and then continued going down. So we do acknowledge that price did go up here and then interact with this resistance level right here. So this forms an M pattern. That is one confirmation. Now this back and forth, up and down, is a bigger fake out. Now with every fake out is an M pattern. Mainly because when a fake out happens, it happens at a level or a point that's been created by price action earlier on, which would be 1, 2. So this fake out, every fake out is an automatic M pattern. It just so happens that this one as well is a fake out in the form of an M pattern right here. So we have three confirmations. And then between these two legs right here, we have this pin hammer right here and this one right here. Now with pin hammers, two pin hammers equate to one confirmation. Unless it comes after a three candle pattern, then it is considered a confirmation by itself. Otherwise, two pin hammers equate to one confirmation. As we can see here, this is a three candle pattern and this is a pin hammer. So this would be a three candle pattern, one confirmation, and then this pin hammer would make the second confirmation because it comes after this three candle pattern. Now coming back right here. So we have a fake out, and with every fake out is an M pattern. And it so happens that this fake out is in the form of an M pattern. So three confirmations so far. All of this is happening within the 15-minute order block. When I write OB, it refers to the 15-minute order block. If it's a 5-minute order block, then I'll label it like this. So then we have four confirmations, and then we have these two pin hammers, five confirmations, and then we have price rejecting this quarter level right here, six confirmations. So I have enough confirmations, six confirmations based on price action. Now for me to enter a trade, I need price action to close below the 20 EMA. So after it has done all of this, 6 confirmations, waiting for price to close below the 20 EMA, which does happen right here, I cannot take this trade, this sell trade, mainly because I'll be selling into this 5-minute order block right here. The only time I sell into an order block is when price forms a peak formation followed by a consolidation and a breakout candle. We'll later on get this breakout candle right here, closing below this consolidation area. So this is why I put a vertical red line here. It shows entries for sells. So enter sells here with the stop loss above the consolidation. Price goes down, comes back up, down, and then back up again. Here we notice that price did form a M pattern as it is breaking out of this consolidation, breakout, retest. So after we've confirmed sells, for me to enter another sell, I just need to see an M pattern or a 3 candle pattern following this initial sell. I don't need to come back up from 1 to 6 to enter sells again. I just need a 3 candle pattern, one M pattern, and then we do get it right here. So sells would be right here with the stop loss above the consolidation area. Here is a closer look. As you can see, we have 2 pin hammers here between right here, the M pattern starting and it right here completing. So this would be one confirmation. But like I said, I only need an M pattern to enter sells. This is just to show further support for a bearish movement moving forward. And as you can see, price did close below this level right here, but then came back up again, closed below the level again. So this is a break and retest in the form of multiple tops. If you look at the line chart, you'll see price going up, down, up, down, up, down, and then back down again. Here, we have another entry opportunity. From here, price going up and then coming back down. This is a 3 candle pattern formed by 4 candles. We just see price starting over here and then closing right here. So this movement would be a wick. So this is a 3 candle pattern formed by 4 candles. So we enter the trade right here. My mistake, I had put it right here, but I meant to put it right here. This is the line chart of the price action we're just analyzing. As you can see, this is a peak formation, consolidation, breakout, retest, and then price continues to go down. Now, this brings me to the end of part 1 of my video. In part 2, I'll go over more examples of a consolidation after peak formation high, but also I'll show you examples of consolidation after peak formation low. So I'll catch you on the next one. Till then, cheers.